Okay, it's been a little bit since I've done one of these and actually bothered to upload it, but obviously each weekend I've been sitting and doing my analysis, and nothing has changed there. And to show that nothing has changed, we're going to start by looking at a silver chart. This is the daily, and I've had 2440 marked on. That's an important quarterly level, as you can see. And the last few days I've been posting on Twitter saying all that matters in silver is this 2440 level, and so it has proven to be the case. I'm really pleased with identifying actually important level. See if I can get enough data for us to see why that's important. No. Maybe the weekly will reveal more. Yeah. So you can see it's a high here. It's a high. It runs through as a pivot. This whole mess here, it's a low. It bounces, goes under, tests, false breakout, under, test, breaks above, retests from above. So it's been a considerable and consistently important level. And I think silver is looking good now, because we're over that. You can see in this whole range since August, it's an 18-month range now. It's been a pivotal area. Silver's been kind of annoying being in this range, as other commodities have been, going up hundreds of percent, and silver's been sort of hesitant to follow. But the period from the breakdown here in August of last year, and each of the lows people thought would be the big one, or I did anyway. The fact that we tested once from the underside, came back down. We got a false breakout, we came down. We tested again, we came down. Now we're above, and we've tapped on it. We're testing, knock. Are we going to stay above? It looks like we are. It looks like we are. And if we're staying above this level now, that means we're coming up here. We're coming above 27. In all likelihood, we're on our way to 29.30, in my view. And some things I've added. Now, I only found out, or it's only, I don't know how recent an addition it is. It's a custom indicator I got from the Pro Real Code website. Someone had programmed it and made it, and you just upload the file to Pro Real Time and you can use it. But it's the anchored VWAPs. You've got to anchor them yourselves by actually typing in the date you want it to start on. But you can now have these anchored VWAPs, which I think are very valuable from what I've seen. The way others have been using them. I'm going to put these on a couple of weeks ago. So I've got a yellow one. Yeah, I've got I've got too many damn lines now. Anyway, let's start from the nearest one. Volume weighted anchored VWAP. Anchored volume weighted average price from this high is this luminous fluorescent pink that we're still under here. The yellow is from this low on Wednesday, 29th September, which is actually in this whole 18-month range the closing low. It's the lowest close in the entire 18-month range. That's why I've done an anchored VWAP there. So we've got the local high, the lowest close in an 18-month range. The orange is from the highest close before or upon entering. I guess no one knew at the time. The 18-month range. And the cyan, this very, very light blue one here, is from the closing low, but where silver plunged to $12 an ounce, which is just ludicrous. So, long-term low, long-term high, closing range low, and near-term high. That's my VWAPs that I've added. And obviously this is just my 18 period momentum green-red bias indicator. Now I've got the 14 band on, just because I've had it on for so long, I can't imagine taking it off. So, and we took out this wick here. This wick here took out this wick here, came into this whole mess here. And then small candles, small candles, small candles, small candles, volatility, and then boop, 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 up, up. And then we got the back test, we got that tap back on 2440. Very annoying. But I'm long from there basically. I'm long from 2440 or just under in MC4. So the big challenge now is, you can see we've got these VWAPs here at 2380, these VWAPs here at 2520-ish, and we're compressing. They're compressing together, and we'll see if it breaks up and out. No matter how many times I resize these windows, it always brings them back too big. Not my indicators, but they're just taking up too much room. Okay, and you can see on the 4 hour, I'll get rid of that, let's clarify. You can see this, it sort of made this channel here, this deviation, this fake out, so up. This one to the down, but roughly channeling. At this point here, we hit the low of the channel on positive divergence on indicator, and we were, and again, everything under this 2440, I wasn't thinking, oh no, we breached the key level. I thought, no. The way it's chopping around, anything under here is just an even better buy, because we're setting up to go over it and stay over it, I think. The only measure of concern we've got is you know, little negative divergence here. We're in a potential reversal zone. Yeah, I mean, you could say, well, you know, low close, higher indicator, that's a negative reversal. Breakouts have to start somewhere. Ideally, this just keeps on going, basically. Similar thing on the 2 hour, 1 hour. We'll have a look at stocks. So let's start by looking at NASDAQ, because I mean, I was calling NASDAQ short ages ago. I was calling NASDAQ short when we were hitting this fib line here, and I was saying this is looking more like short worthy now. And then we were hitting this fib line. Sorry guys, I'm really tired. So then we went down, we were bouncing between these two. We broke through, we retested, we went down, got a little bumperoo here off the next fib line, plunged the next fib line, retested that fib line twice, crashed through to the next fib line. Look how this one acted here as support and resistance. Shot up through it, back up to this fib line. Long term, I put that on the 2 weekly chart, the fortnightly chart. And with the bit of spare money I had in the S&P, I did take a tiny short. Woo! From seeing the NASDAQ Fine resistance at these levels. I took a tiny spec short because obviously I'm still trying to get long silver. And logical first step, or logical next step, would be to retest here, here, and if we're definitely going down, the next level you'd be looking at would be 12,000. And there's your weekly. Not a good look to it. Not a good look to it at all. We go over 14,840, then I suppose that would be an indication to go long again. In my humble opinion. Semiconductors is important for indices. But like high yield debt, it can show good correlations, sometimes leading. But this is an ugly look to it. This looks like left shoulder, head, right shoulder, and again we've started plunging back down. Not a good look to it at all. Again, it would need to get back over 27,360 to recover this sort of ugly look to it. It doesn't look good. So speaking about things that didn't look good, oof, bonds. Here's your weekly chart on bonds. Let's zoom out. Let's go monthly. Yeah, here we go. All the way back to 2008, 2009. Look at that. This whole maniacal run-up through 2018 and 19 into 20. It raised, most of it erased, half of it erased in 2 months. 3 months, 4 months, As fast as we went up, we're going down even slightly faster. Well, we are since here anyway, since Christmas. You can see these long-term trend lines. When I saw that back test, oh my goodness, that's not looking good. And again, it's a pivotal area. Again, you can see we chopped through it, pulled some back, nearly retested, but then we dumped out on the next candle, and now we're at, you can see, we're entering this sort of support confluence here. So we might find, any time from now basically, is there going to be buyers in here, or are we going to wait to come down to these lows here under 10k? Astonishing move. Astonishing move. Look at the daily. And again, look at my old annotations. This triangle we put on, there's the center pivot. Look at this line. Look how we retested here. How we retested here and then sold off. Beautiful stuff. Yeah, and look at the divergence on this second high. It's not looking good. So my only concerns really, we're looking at the intraday charts. It still is not looking great. You pull out, you look at the daily, it looks a lot better. So hopefully that sort of ugliness on the lower time frames can be overcome by the importance of what's happening on the higher time frames. Anything else worth looking at? Uranium, I suppose. Yeah, look what we came back to. Bonk, 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 bonk. Sort of more erratic price action here, not level to level, not like bonk, bing, bong, bing, bong. Erratic, but solving upwards, who knows? Excuse me. So we looked at indices, yeah, the dollar. This is the weekly dollar. Talk about cracking reversals. Where's that low? Here, this whole area here, yeah. So we can see, oops, we've got the triangle. And you can see we've come right up. I'll make that the same colour. Into the centre of it. The question is, what now, and does it matter? The fact that we found support at this fib channel line here makes it look good. Oh, I don't know, guys. Maybe the monthly can enlighten us. I'm not feeling a whole lot of clarity from looking at this chart. Maybe we're in a selling zone. If silver's going to go up, I mean... Oh, as we know. Yeah, I think sell. I think with the way silver looks, the way other commodities have gone, the fact that this line here, remember, is the very centre of that triangle that we drew, I would say sell. Anything else? Oh, we looked at the Nasdaq, but not at the S&P. Yeah, that's the look it's got at the moment. Look at that sort of rolling over look to it. Do you see it? It doesn't have to do that, of course, but I mean, wow. Wow! It would be fitting. Look at that. These are slightly more speculative. You can see the rounding out. You can see the rounding out on testing from the underside action here. That's definitely. And I'm not making that up. Daily. 360 units is too much. Go to 200. It's a bit messier. You can tell I've not looked at this chart and cleaned this up in a while. There's your negative divergence. And no needs for movement. We take out these highs, take out these wicks. Whoops, down we go. And this 4641 was an important pivot in the past. We came back up to it. It was important again. The lows in the S&P were really telegraphed with the divergences, and also I've taken price volume trend off, but also on price volume trend that's a ludicrous positive divergence. And most of the time price volume trend doesn't give good signals, but at major lows like that, yeah, good signals. Same for the Nasdaq. Same for the Nasdaq. But now they look shit. They look great down here, and they look shit up here, so I think they continue to look shit. So let's have a look at some of our intermarket, internals, breadth, etc. Let's go back to silver. So silver against stocks, silver against the S&P. Years worth of data. Of course, we've been in a range for 18 months. So let's make it 18 months. So this is the whole period that silver has been in its range from hell. So presumably it was doing better against stocks, doing better. And it shat the bed. There was that initial plunge in stocks, and then the retracement. This was stock going back up again. So we were just looking at the low in stocks, that would be around here. And then if you look, where have we come to? On the ratio, we've come to very clear support. Very clear. And that's a huge positive reversal on momentum. This high here on the ratio was coming up into this pivot here. Look at that pivot. Slice, 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 slice. Through so beautifully. So we're coming for that next, I think. So it's looking good from a ratio perspective, silver against stocks. Silver against bonds. Now, bonds have been shitting themselves enormously. So even though silver puts in, well, it's still in the lower half of its range, big lows between September and December. Silver putting in big lows here. And we've only had somewhat of a comeback. We're still in the bottom half of the range, but look at the strength against bonds. As bonds have collapsed. The issue is, are they due for a bounce? Or will this continue? It's been like looking at stocks against bonds. This looks amazing. Stocks look amazing against bonds until you'll say, well, actually, no, look, they've gone nowhere since autumn of last year. It's not the stocks have done well, it's that bonds have done disastrously. That's what makes this ratio look so good. Silver poised to move. Again, against bonds, who even knows? And does it matter too much for our purposes? Against gold, looks like we're due for a similar kind of move. It looks like we've been bobbing along these lows in the ratio against gold, and we're just sort of ticking, trying up, and we should be due, I think, for outsized. It's the compression, downwards channeling compression, but unable to get below this sort of. The ratio is not moving below this pivot area here. Here, yeah, that line. So, yeah, ching, lift off, please. If we look at stocks. Yeah, NIOD was declining from summertime of last year when the S&P went up another, say, 4260. Let's call that 4790. Yeah, another 530 points. Oof. So that was an early signal, but all you had to do was. So when did that signal start? Yeah. So. Yeah, if you put a trend line here, you'd caught that. And if you put your more expansive trend line on, you'd caught that. Maybe that's like a back test. Yeah. But it's also possible that this is now support and stocks are, this little move down notwithstanding. Which again, we should look at the reasons for that on the S&P and the Nasdaq charts. Maybe this is now going to go back up. Either one. I'm going to say... I'm biased down on stocks. Here it was a lot clearer on NIAD. And again, when you get these big negative divergences at major highs, and these were major highs, these were lining up with long-term trend lines, with the fib channel lines on the Nasdaq, and this, the fact that it's major highs, and we've got this big divergence means that, sure, this could be coming down here into support. 1, 2, 3. Resume upside. You've got to say the way things are aligning, the way things are happening in context. Context is negative overall, and look, we're below this horizontal support area here. Negative. Rhino. We managed to get back up to 80 again. But look how it bounced. Look, it was scolded cat. Bounced like a scolded cat. we're not getting above it and, you know, chugging around, coming back down for retracement, getting above it, spending some time there, showing we can stay there. We're showing we can't stay there. We're showing we can't stay there. Bearish. On the face of it. On the face of it. MAHL. Nasdaq new highs, new lows. You can see it's broadly positive. You get the odd one, the odd day, the odd week. Getting a bit worse here at these lows, where we're below the net zero line. But then it becomes continuous and it becomes deep, and then deeper, and still deep. We just got up to sort of, oh, we can't make our minds up. We're not even, you know, we're not getting over and holding over. We're chicka. We can't make our mind up. Indecisive at these highs. We nick the wicks, and then returned. We're back under the zero line more firmly. It seems, on the face of it, the way things are getting in context, things are aligning, not good for stocks. Alright, let's end it there.